Good morning, everybody. Welcome to What's Hot on the Open, taking a look at all of the U.S. market action here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's get you a real look of what's going on with the markets. And we're looking at a 30-minute chart. And the reason why is because I really want to see what the action looks like now on the open after what we saw at the end of the day yesterday. You saw in the last hour and a half just a precipitous drop, took off all of the profits that we had built in yesterday and retraced them all the way back on a 30-minute chart, right? So shorter time frame. The Dow is actually on its best levels now after being open for about a half hour, and it's trading at 20,674, up 26 points. And you're seeing right here, first 30 minutes, it was testing its lows. Of course, we had the Fed minutes came out yesterday, and what the market pulled from that seems to be that there is a very hawkish tone, that they want to unwind this balance sheet, and that unwind, instead of being over a 1, 3, or 5 year period, it could be something that they could just basically look to unwind this in one foul swoop. We'll have to basically, over the next few meetings, see what the data is going to drive them to do. But they look that this Fed, in this particular group, because there's a lot of them that are going to be potentially moving on, are looking to set the blueprint on this unwind of the balance sheet post the financial crisis. So you see that the Dow has recovered quite nicely this morning on the open. If we actually look at the one-day chart, only just to give you perspective about support and resistance, again, in this battleground, folks, as I had noted for pretty much however, looking at this chart, all I'm using the 20 and 50-day moving averages for is to give me an understanding of what the short-term traders are doing and the intermediate-term traders. The short-term traders are typically what you might consider high frequency or retail, people that are just looking to make quick profits. The intermediate-term trader, that's more like an institution. That's going to be looking at the fundamentals, the technicals, a combination of the global components. But this is where I know that institutions, if it's above this level here, this red line, that they're happy, that they're sticking with the stock. And until that's challenged and broken, that the thesis is, in this case, that the market is still bullish, even though we've been in a pretty tight consolidation in the Dow Jones for basically the last 3 months. Now, taking a look at the S&Ps, have had, again, a good morning. They came off of their worst levels on the open, and you can see that they are trading right off of their highs, up 380 at 2,356.70. But here's that drop. We saw it yesterday. The market is very sensitive with the fact that they don't have a clear picture of, first of all, what are the policies of the Trump administration, nor do they have now a firm blueprint on how the Fed is going to unwind this balance sheet. There's just a lot of moving parts going on, and there's no real clear vision on how they're going to tackle this. Taking a look at the NASDAQ, the NASDAQ has been the best performing sector, and it's trading off of its highs. But again, it was not immune to the pullback yesterday. So you can see, even though the NASDAQ has been the best performing index as far as the major indices go, it wasn't immune yesterday, and today it's trading right off of its highs, but still right along that 20-day moving average. You see a break of that 20-day moving average, that means that you could see a shot for 5,300. That break of 5,400 means that you're going to see a challenge potentially of 5,300 on the NASDAQ. So again, that's why I'm putting these levels out here and using these moving averages is more of basically just mechanisms to make me look at why a market's moving in a certain direction, really start digging deeper. Finally, the Russell 2000. This is the most sensitive to domestic policy and whatever the Fed's going to do, whatever the President Trump's administration is going to do as far as policy is concerned. These are very sensitive to the economic policies here in the United States. Small businesses, and they really have been, as I have told you many times, the canary in the coal mine. weakness in the small caps is going to indicate a red flag for the major indices in the market in general. And we saw that. We've seen that consistently. A pullback and a challenge of the Russell 2000 was an indication that the markets are going to at least bare minimum grind, if not pull back. And they did that yesterday. And we saw the action actually occurring in, if you take a look at this, it was already pulling back before we had the announcement of the Fed minutes. You saw it pulling back here, consolidated, bounce, and then came back down. So you're seeing weakness right now in small caps. That's not a huge positive for the markets. But what is a positive right now is that cyclical sectors are moving to the upside and leading. As a matter of fact, if you take a look at the consumer discretionary ETF, XLY, this is one of the components of the market that needs to continue to lead. In the first 30 minutes, it's bounced up. Now it's actually pulling back a little bit off of its best levels, but still up there, up 35 cents at 87.60. XLY has a low implied volatility rank, so there's not a heightened sense of huge violent moves. As a matter of fact, if I take a look at the one-day move, you want to see this sector stay above this green line. You want the short-term and intermediate-term bulls in control here. If, in fact, you start to see that the market starts to pull back here, that means that the general market could be in a little bit of a flux. This is just a good sector to keep an eye on for the health of that move, and that's a cyclical offensive sector that you want to see moving. XLE, this is the energy ETF. This has been moving up 55 cents, up 0.78%, almost 0.8%. You can see that it bounced off of its 20-day moving average. So short-term bulls are starting to take action here. And that's in spite of the fact that we saw what would be considered a bearish crude inventories number. Not only did we have a build of over 1.5 million barrels, but we've also seen that stocks right now of crude oil are at the highest, the stockpiles are at the highest that we've seen historically. So it's impressive that energy is moving to the upside, but crude is really the catalyst. And again, this is one of those cyclical sectors that you want to see moving to the upside. Right now, the implied volatility rank is around 10. In XLE, that is very low, not a heightened expectation of big moves in XLE, and it's pricing in a 64-cent range between now and the close of business tomorrow. On the counter-cyclical side, telecom. IYZ is an ETF that tracks the telecommunications sector, and you can see that's down 8 cents. Now, it's not whopping, but the one thing is that you've seen that this sector, which normally is more of a defensive sector, you have a lot of companies that have big dividends that are reflected in here. The most notable name in the telecommunications ETF is AT&T. It's down a little bit today, so that's weighing on telecommunications, but you can see that it had already broken its 20 and 50-day moving averages. It's now broken above its 20-day moving average. So short-term bulls in telecommunications have started to gravitate towards this over the last 3 or 4 sessions. So we're going to watch this one very closely. You're going to want to watch these defensive counter-cyclical sectors to see if there's movement by the bulls, because these sectors have been beat up. Another one is utilities. We watch utilities very closely to see how they perform. If they start to pick up, they're down today, but if they start to pick up, and they are on a bullish trend, challenging their 20-day moving average. A break there puts the short-term bulls that have built in to positions over the last 20 or so days, last 20 to 50 days, on notice. So we're going to watch this sector. If you start to see utilities move to the upside, especially now that we have President Trump and President Xi meeting, that's the Chinese president, over the next couple of days, you could see, if this starts to move to the upside, some defensive qualities. And then finally, healthcare. We continue to hear mutterings that healthcare is not dead, that they're still working through it. Well, guess what? I would have said no kidding. Because in spite of the fact that healthcare did not get a reform, it has been in that battleground. It's stayed above its 50-day moving average, but it's under or below its 20-day. This is my battleground. I was not freaked out about the fact that the ACA did not pass and repeal and replace has not occurred, or where there was no vote, because of the fact that I saw that this area, both the intermediate term bulls and the short term bulls, have not completely abandoned the healthcare stocks. this helped me then reassess what my understanding and positioning was in healthcare. And again, this is just transparency to control emotion. And right now, healthcare right now in XLV holding up this morning, up 7 cents. We're going to watch this. It could get more defensive here. These names pay big dividends. And if people are looking for a quest for yield while they're trying to figure out what the Fed's going to do, not only with rates, but unwinding their balance sheet, you could see that more investors are going to park some dough into these types of stocks, the higher dividend paying, the higher yielding stocks, because they want yield, and the bonds at this point in time may be a little bit too volatile to park money in there, and which is traditionally a safe haven. Speaking of bonds, taking a look, you have the 2-year, the 10-year, and the 30-year down today as far as price action. Yields are going up. That's understandable, especially after what the Fed has come out in their minutes. We'll keep an eye on the bond market to flag any type of movements as far as a rotation from the bonds into potentially the securities markets. All right, folks, that's it for What's Hot on the Open. We will be back at 1:30 Eastern Time. I'm going to be covering some really cool strategies that you could start utilizing in your portfolio. Join us here at MarketStream.live. See you then.